So if y'all have any questions during the presentation, please feel free to stop me. You can just unmute yourself and stop me, or you can send a chat. If I don't respond to the chat, I'm probably just not seeing it, so you can stop me. But we'll definitely do some questions at the end too, because the presentation isn't very long. And like I said, Brandy Squires is on the line with us, and she is our senior loan officer, and she's been with Guild for quite some time. So, and she's also been in the banking side of the industry as well. So she has a really huge scope of knowledge. So she might interject as well, just because she understands the USDA product very well also. I have been with the company for 2 years. I just had my 2-year anniversary. So I've actually gotten to work a few files that were USDA. And when I say a few, the reason why it's a few is there are some restrictions when it comes to underwriting guidance for USDA that we'll get into a little bit, because I think it's really important for you to understand that. We have had a couple clients where like, maybe we couldn't approve them because their debt to income ratios were a little bit high, and that posed a concern for them, we'll say. So we always like to tell people up front, especially you being out there with the customers and clients before us in some cases, it is good to have that knowledge in your, in your pocket, so you know what to tell them and what they can expect. So that's what we'll get into today. So let's make sure I'm in full screen mode. All right, here we go. Okay. There we go. Okay, so first and foremost, just an introduction for what we're going to be discussing today. Obviously, the USDA product is centered for rural communities. There are communities that are selected by the government that they deem as a target area that would be approvable for this type of product. So there is a tool that we'll review together as well, that you can look up a property to find out if it's in an eligible area. I will say out here in Grayson County, a lot of the surrounding communities do have eligibility for that, for this product. So it does work if people are wanting to live out in the country. And we do service manufactured homes for USDA products as well. The greatest thing about the USDA product, I think that is the most enticing for most clients, is that it's 100% financing, which means no down payment. So the only other product really that we are able to approve often with no down payment is a VA loan. So this is great for customers who maybe don't have a lot of money saved, and they want maybe a modest home out in the country by themselves, just to be out there free from all the chaos. And that's kind of my goal one day. So you never know. I might need this product too. Okay, so our agenda is to talk about the mission statement, talk about home buyer benefits, transaction types, eligibility, why you should choose Guild, and to answer all of your questions. Okay, so the mission of USDA Rural Development Single Family Housing Guaranteed Loan Program is to assist low to moderate income home buyers in rural areas to achieve their dream of home ownership. So what are the benefits? Like I was saying before, 100% financing based on the market appraised value. So for example, if a customer comes and says, I like this property, it's $150,000, but I don't have any money for a down payment, we can finance a $150,000 loan. The loan limit is up to $726,525. However, I would say that you also need to look up for each area and make sure that you're adhering to that area specific. So like I said before, we'll look at the tool together. Obviously, this is geared towards the low and moderate income home buyers. So I really like that because there's a shortage of affordable housing, as we all know. So when you can find one, it's great for the people that really need it the most. So I try to keep abreast to what's going on in the market and all the new listings. And that's one thing, like Dylan and I are both kind of we've been in the search for a house. And so we share listings all the time. He's like, yeah, I've already seen that one. I'm like, yeah, me too. It's on the market again though, and they lowered the price. So every now and then, just so you all know, we're on your side, because every now and then if a customer is struggling or they're not finding what they want, we'll even tell them, hey, well, we'll look at it right now for you, and we'll Google some stuff for you too, to try to keep them engaged and encouraged, because it is difficult, especially in our area specific. So we understand that. It is available for first-time home buyers. There are flexible credit guidelines. The credit scores can go as low as 600. In some cases, in a perfect world, we were seeing where USDA was approving a little bit lower than 600. However, right now, for pricing purposes, 600, I would say, might be a little tight. So just keep that in mind as well. So debt to income, which is the mortgage payment plus all the monthly debt payments that they have on their credit report, those added together and divided into the household income is how we look at debt to income. So debt to income requirements for a USDA product is 41%. So the ratio is very tight. As you know, on FHA products, the ratio can be anywhere from 45% in some cases with a good credit score and no recent derogatory history. In some cases, you can go up to 55% on FHA. On conventional, it's usually 45% to 48%. But USDA, it's pretty solid. I mean, it's 41% and that's it. So that's what makes it a little difficult at times to get borrowers qualified. So the different transaction types that are available are for rural housing purchase, a rural refinance, and a rural streamline refinance. Streamline refinances are pretty cool because it's very low documentation. So basically what we're asking from the customer is minimal. So usually you don't have to re-qualify. In a lot of cases, you're qualifying them mostly for looking at their income, but not necessarily looking at like all their debts and so forth. You're just doing a streamline based on their previous credit worthiness, I guess you could say, and how they performed in the current loan that they have. And it has to be a USDA to USDA product, right? And we do have a chat. So let's see what the chat says. So I'm sure everyone can see the chat. So this is great. Thanks again, Brandy. So as long as you have not owned a home or had a home in your name on title for the past 3 years, you are considered a first-time home buyer. And so that's great to point out. When we submit the application, when Dylan sets up an application for a customer, one of the series of questions that they have to answer for us are declarations from the government. So basically, it's the initial, I guess, approval requirements that we have to determine if they're a first-time home buyer. And it asks if they've owned a home in the last 3 years. And if they report yes, obviously they wouldn't fit that criteria. So good question. All right, so like I said, we're going to look at how you can determine eligibility for a client. As always, we do not mind doing this for you. I know that you're always on the go, and sometimes you're in your car and you're traveling from house to house, and it's very crazy for you guys sometimes. So just shoot us a text, send us an email. We'll be happy to look this up for you as you find properties that you want to know if the customer will be eligible for. Remember, there's 2 requirements that they have to meet. They have to meet the income limit for the county that they're looking in, and they also have to look at the top to see if it's eligible. Sorry for that. I don't know what that was. So we'll go ahead and click on these links, and I'll make sure that everybody gets a copy of the presentation after our meeting today and a copy of these links as well. So let's start with the income limits. So basically it just takes you here to this cool little interactive map. And then you can scroll down through here and you can hit find, like Control F to find, and you can look for the county that you're searching in. And so we're going to go to Grayson County, Texas, not Kentucky. That's thrown me off before. So just keep in mind all the states are on here. So let's see if we can find Texas. Texas. There we go. Okay. So as you can see on here, there's a lot of information. So obviously what you're looking for is you're looking for, you know, how many people live in the property, and for income requirements on USDA, everybody has to be accounted for. So everybody that's going to live in the property, if they are earning money, they have to account their income. So keep that in mind. I would just say, you know, look through here and see which county you're looking for. So in this case, oops, Sorry. So in this case, we're looking for Grayson. And I'm not sure if Grayson is showing up as its own county. Yeah, I think it's just because it's an outside county. So we'll just look at it any county for now. So
Go
right
back
now,
down, Marisa. There was Sherman Denison.
Did it say Denison?
Sherman Denison, yeah, it was there.
There it is.
Yeah.
Okay, so keep that in mind. I always forget that. I knew it was difficult to find it on this page for some reason, but there's a different tool that is a little bit easier, and I'll show you all that too. But yeah, Sherman Denison is right here. And so we're looking at very low income, and moderate income right here. So when you look at this, you can see on here, let's get rid of that. You can see on here what the different income requirements are based on how many people reside in the home. Gosh, sorry. See right here. So these are just column headers for each one of these, and you just scroll over to look. Okay. So after we qualify their income, usually what we start with for documentation of income is we have a tool called Account Check. And I'm pretty sure all of y'all might be familiar with this, but we started streamlining our income review process with Account Check, and it's been really successful for us. So basically what it is we send out a link to the customer. They log into Account Check just as if they were logging into their bank accounts. And then they tie their bank account information into Account Check. And once they've submitted that and shown us the accounts that they're utilizing for down payment and closing costs and their income, we can see everything on their bank statements up to 90 days. So usually we ask for a 60-day review. In some cases, if they're self-employed, we'll ask for a 90-day review. But it's a great tool for us to link to our underwriting process because we have an automated underwriting tool that can absorb that information. It links together and we can determine what their income is in some cases without having to ask for documentation. So it's great. So that's where we always start. So that's where we'll start with the customers, and then we'll determine how many people are residing in the home and make sure we get all the documentation for their income. Does anybody have any questions about this?
So what did it say for one person in the home? What were the incomes?
So this is 39,100 for very low, and then 62,550 for low income, and then 103,500 for moderate income.
Marisa, can I say something? I'm not sure exactly what the very low and the low income has to do with USDA, but basically what you would go off of is where it shows the guaranteed loan, the 103,500. That is the maximum income limit up to, what is it, five people in the household that you can have. And then it jumps up to the 136.6. So just go off of that bottom number.
Okay. So this is what she was referring to, this bottom number right here. So for every county that you look at, just look at the bottom number and make sure up to the number of people in the household that you're looking to make sure that you fit that guideline.
I just can't earn more than that.
Correct. Correct. All right.
That's gross income, just like a typical loan, correct?
You are correct. Yeah.
Awesome. Okay, so let's go back to the PowerPoint. And so now we're going to look at the other link, which is the income and property eligibility link. And this is what I was talking about. It's a little bit easier to use this link, in my opinion. So usually what you're looking for is single family housing. And so in this case, we'll do, there's two. There's the guarantee, like Brandy was talking about. And then there's the single housing family direct, which is the very low income that we're talking about. So we'll just look at both of them. But you can, go ahead.
That single family housing direct, we don't actually, that would actually have to go through USDA itself. So it's not a program that we have to offer on that. So.
Okay. Okay. So this is the tool that we normally use here. Like Brandy was saying, this is how we qualify our customers. We don't qualify using this tool. So we're qualifying with a single family housing guaranteed. And as you can see, it does this little pop-up and it tells you exactly what we're looking for. So basically it's saying that we're assist approved lenders in providing moderate income households the opportunity to own adequate, modest, decent, safe, and sanitary dwellings. So very good information, but property eligibility is where you're going to want to go as a realtor. So basically you click on the property eligibility, and right here, there's a disclaimer that they always want you to click accept for. And then basically you just pull up any property address. So let's think of a property address. Probably should have had this ready. Brandy, do you have any property address?
Yeah, put in my address.
Okay.
212 Terry. No, Terry. Sorry. There you go. Lane, LN, and then Pottsboro.
And it does want you to type this out. So make sure you
And
put,
you're the winner.
so this is located in an eligible area. So do you have a USDA loan, Brandy?
I do not, no, but Pottsboro is basically most of the area. It's Pottsboro, Howe, Gunner, Van Alstyne is actually in that as well. But Sherman Denison, there's a little part in Denison that is, but for the most part, Sherman Denison is out.
Okay.
In the past, it's been a population issue, and the city limits of Sherman and Denison have excluded all those properties. But like Brandy said, sometimes we find things maybe in ETJ that are just outside that are eligible based upon the map. So you just have to look and see. But if it's inside the city limits, Sherman and Denison, typically in the past, it's always been excluded.
You're right.
Is there a map that just shows like an eligibility map of what does qualify?
So Monica was asking, is there an eligibility map that just shows you like all the boundaries? I'm not sure. I've always used this tool. Brandy, do you know if there's a different tool that shows boundary lines?
There's not. I mean, you can actually scroll out on that a little bit, and it will kind of show you like the green or the well, like in this instance, I guess it's all the green that is eligible. And if you go like to Sherman Denison, you can actually go out and you can see as well. But there's not, you know, just a map that shows everything.
That's what you're referring to. Yeah, I see that. So like all of this area would be eligibility areas if it's green. Is that what you're saying?
Yes, and I think see the yellow where it's Denison. And you might go down further because it may even show down at the bottom that'll show like what is eligible and isn't. See where it says ineligible area map legend. So that area is basically showing you what's not eligible.
So it kind of does. The green is eligible.
Yeah, that was a really good question. See, we're all learning. It's awesome. Okay, so next, what I would say is about income eligibility. Remember how it was kind of weird looking at that tool? Yeah. So this is better in my opinion. So you can use this tool to pick the area that you're looking for. So obviously we're looking in Texas. Unless you're also licensed to look in Oklahoma, you could do that too. So in this case, we'll do Grayson. Sorry, I'm working from a laptop today, so it's a little different. Okay. So here again, remember, if you forget, number of people in household means this. So it means the applicant, the co-applicant, all other persons who will make the applicant's dwelling their primary residence for all or part of the next 12 months. So just keep that in mind. You have to include everybody in the house. And it even defines everybody else who could be considered a dweller. So foster children as well. Okay. So in this case, we'll just put 4. And then the number of residents that are under 18 years old, disabled, or full-time students, you would put that there too. But again, it has little question marks. So just hover over that with your cursor and it will tell you exactly what that requirement means. So you really can't fail on this site is what I'm trying to point out. It's pretty cool. And then obviously it's asking you about loan applicants or co-applicants that are 62 or older. And if there's any disabled persons living in the household as well. And again, there's little question marks over here. So just remember the question marks are just little hyperlinks to give you more details. Okay. So we're just going to hit next. And now what you can do is this is what I was talking about before, where after we determine what their income earnings are, this is where you would put that information. Okay. So we're just going to make up some numbers. And so we'll say 1,000. Okay. And we won't put any breakout of other income on here, but you can, obviously. You want to break it out according to this this method, because they calculate it differently based on each type of income. So just make sure that you do that. And then right here, this is talking about all other income received by adult members of the household. So if you don't know what that means, again, there's a little question mark right here that'll tell you exactly what that means. And I didn't mean to click it, but it's okay. Okay. All right. So now we're going to.
I will tell you too, or tell everybody on the line that even if we can't qualify, let's say commission, overtime, anything like that, which we have to show a proof of 2 years in order to be able to count that. But USDA on their qualifications, we do have to count it. So even though we may not can use it as qualifying income, we still have to use it toward the income eligibility in order to see, you know, if they meet that income guidelines or not.
I'm glad that you said that. So this one does meet the guidelines for Grayson County, and it will tell you right here what that is. So like we were saying before, that maximum amount, which was that bottom number on the sheet that was provided, is right here, 103,500. So ta-da, so much easier, right? And it makes much more sense. So usually what I do, so I don't forget this and have to go back every time, I just take a screenshot of this and I put it into our log for the customer so we know exactly what we're looking at. And then if their income were to change, which means maybe they got an improvement and they are making more money, we would go back and adjust it. But just so you know, this is kind of our thought process when we're looking at the customer's application. So as far as all of this goes, keep in mind, I will send you a copy of these links. Like I said, do you have any questions or do we need to go through it again? Anybody?
Can you just start where you went to click on one of the tabs to get to that section?
Yes, ma'am. So Monica just wants to kind of start from the very beginning, which is a very good place to start. I don't know if anybody knows what song that's from. Anybody?
No.
The Sound of Music. The Sound of Music. Okay.
Oh, really?
Uh-huh. It was 212 Terry. Is that what you said, Brandy?
Yeah.
Okay. So we're just going to start from the very beginning, and we went back. We're on the main page for the USDA site, for the eligibility site. We've already gone through and we clicked that we want to look at single family housing guaranteed. And then we clicked on property eligibility. And now we've typed in the property address, and we did the full address because we want to make sure it picks up that we're looking for a Texas property. And then you just hit go. And it is eligible. And we can see all the green property areas that would be eligible as well. But every time I would say, just make sure you enter a different property address in here so you know for sure. I wouldn't just guesstimate, I would make sure. And then from there, we just went back over here to two tabs over to look at income eligibility. So just click on that, choose your county. Oh, sorry, state, and then county. Let's look at a different county. Let's look at Dallas County. Okay, and we'll just do the same criteria. We'll say 4 people. And we'll do 3,000 and 1,000. This will help you see the difference. All right. So this one does as well meet the income limit for Dallas County. And their income limit is a little bit different. Their maximum is 112,000. So you see the differences? So
yeah, the other one was like 103 or something.
So guaranteed, Brandy is telling us guaranteed means that USDA is guaranteeing the loan if the loan were to default. So if we have financed a USD loan and the borrower defaults, the lender's loss is not so great.
Sounds similar to a VA to me.
Yep, it is similar to a VA. All right, so I think we're good on the tool. So we'll go back to our presentation. And then let me make sure I didn't skip something. Sorry, I did not. Okay, so why Guild? Obviously, because we have the best leader, Michelle Castle. We have senior loan officers like Andy. We have a great team in-house here at Sherman. We all learn from our training from corporate level down to in-office training. Every day we're learning, every day. And for Dylan and I, we have a great team lead. Her name is Nicole. I'm sure most of y'all know Nicole Thompson. And then our other teammate is Tiffany Wild. We think as a group, meaning if we have a question or we're not sure about some guidance, we always go to each other and converse about it and make sure we're all on the same page. So usually whenever you're calling us, you're getting that type of answer because we've already conferred with each other, or we've taken it all the way to the boss or to our underwriting manager that is in-house as well. Ashley Davis is our underwriting guru. So if she doesn't know, she will find the answer for us. And we have great support from all the way top to bottom. So that's why you should choose us. Mm-hmm. And we're really friendly and we're fun. And people like, the quirkiness, I think, of Michelle. And that trickles down to all of our different personalities too. Even when I try to be a little bit serious, I'm like, oh, whatever, I can't be too serious. It's great. I'm having fun. And I think your customers really appreciate that and feel that from us. And so that's why you should choose us. Also, we're a direct lender. So as a direct lender, we enjoy speed and direct control and closing. So I would just say, our lender fees, in some cases, you will see a difference in lender charges. And we get that. But usually Michelle always says, usually at most, it's maybe $1,000 separate. And if that is an issue for your client, we ask that you come back to us and talk to us about it. And we can look into the possibility of maybe a lender credit if we can. If we can't, we'll tell you, that's a great deal and they should go, and that's another reason why you should choose us is we're very transparent and we're very honest. The other thing too, is when we're quoting these loan types, we tell them kind of worst case scenario up front, so when we're disclosing our fees, we're disclosing high end, especially for escrows. We want to make sure that we're covered because an escrow payment can be the make or break of the deal, especially when the ratios are tight. For 41% debt to income, we definitely want to make sure that we're qualifying them through the underwriting system platform that we use, which is called GUS, by the way. And we'll go through that too. I have that pulled up. So that's another reason why you should choose us, because we're not going to hide fees. We're not going to not quote something up front and then tell them, oh yeah, later, you owe another $2,000. In most cases, we've told them everything up front. We're local, obviously. We're in Sherman. If you don't know, we're on 714 North Travis in Sherman, Texas. You should come over and have a coffee with us one day. And then we have a whole range of loan products. So even if USDA doesn't fit their need, there are other programs that we can get them into. And usually if USDA doesn't work for them, it's probably because the debt to income ratio. And if that's the case, that's okay. We can look at an FHA loan. We can look at other products. So, and usually in most cases, a property seller that would approve a USDA loan, in most cases, they're probably going to approve an FHA loan too, as you guys know. So looks like we have a chat. Okay, so in case y'all didn't see, Brandy also gave us some more tidbits of knowledge. She said that on USDA, if the home appraises for over sales price and the borrower's debt to income is still okay, we can finance closing costs. So that's another plus. USDA is limited up to 6% for seller concessions. Good to know for you guys.
I will say one other thing too is this loan program is truly for like your low to moderate income class. So if, let's say, somebody wants to go USDA, but they have, let's say, $50,000 in assets, then they're probably not going to be able to go USDA, because USDA does look at and see if they have a lot of assets, why are they needing to go USDA? And so a lot of times you can't do that.
That's a good point.
So can you tell us what underwriting guidelines the appraiser would use? Is it more like an FHA or is it more of a conventional?
Good question.
In the past, there was some quirky deal about a swimming pool, if you want to mention that.
Yes, you are correct, Norman. So yeah, USDA is a lot like FHA. So, you can't have rotted wood. The house has to be, in good condition. And then as far as the swimming pool, I do believe that has gone away. So I do believe that you can now have a swimming pool. You cannot have, let's say, because a lot of this area for USDA is rural, you cannot have a working ranch on the property.
Okay.
So if, you know, if you can do anything business-like on the property, then you're not going to be able to go USDA.
That's a really good point, because we have had clients that came to us and it's like considered a working farm and we couldn't do a loan for them. So I'm glad you said that.
Did y'all already mention any kind of funding fee?
You're so good, Norman. There is a funding fee for USDA, and I honestly have not done a USDA loan in a while. And so I'm not exactly sure even what it is right this second. I'll get back to you guys on that. But the funding fee is financed into the loan. So it's not something the borrower has to come to closing with. But I'll look that up while we're still on, and I'll see if I can find that, Norman.
And if you can't find it while we're still on, we'll definitely, when we send out the slide presentation, we'll answer and address all these questions too, because that's a really good question. And we probably need to add that to this PowerPoint. So good point. So the other questions on the chat were, does the interest rate compare to that of an FHA conventional loan? I would say maybe FHA, but I would say it's kind of in the middle. And going back to what I was saying before, even though that minimum requirement for the FICO score is 600, I would say right now for pricing purposes, they need to be in a 650 range. We're not going to turn them away, but we will definitely give them recommendations on how to boost their credit score so they can get better pricing. But if we're priced out, which means we are not allowed to charge them too much for the cost of the rate, we will have to tell them that, and we'll make sure to tell them that up front. So usually what happens is when we look at the application, after we've looked at the income, we are already looking at the rates. So as soon as we pull the credit report, we're already going in when we set up to kind of look at what those rates would be tentatively before anything. And then we kind of plug that in just to see if we can even price it. So just so you know, we're not going to waste anybody's time. We're going to make sure that they are aware of that. But that's something else too. I don't mind doing a total cost analysis for y'all in Mortgage Coach and kind of giving you a comparison of what today's rates are for a customer with a 650 FICO score or 600 FICO score. I can give y'all a comparable for that too. So I'll make sure to do that too. And then also, can you tell how much the person can be approved for? So if they make $32,000 a year with no debt. So that goes back to that income tool that we were talking about or showing you, Mia. So I would just say we would just need to use that tool to determine if they would be eligible based on the county that they're looking at. And then from there, if they don't have any debt, you know that their debt to income would just be calculated strictly by what the mortgage payment would be divided into their gross monthly income. So remember, debt to income is the monthly mortgage payment, which includes escrows, plus all the monthly debt payments that they have on their credit report divided into their gross monthly income. So that's how we calculate debt to income. So roughly you could probably do it on a calculator, but we'll do that for you too if you need us to. It's no problem. Any other questions or comments or adds? Dylan.
Can you work up those scenarios or how much they qualify for using our to-go app or our calculator app?
I'm sure we probably
That's a trick question. Yes, you can.
So Dylan's going to show us how to do that.
So there's not a whole lot that I really wanted to show you guys just because I can't really share it on the screen too much.
Okay, let me pull up. Here's Mortgage Coach. So we're not showing anything. Oh, yikes. Sorry. What am I doing? It's hard to work on a laptop. I'm getting there, I promise.
Yeah, this
what just happened? Here we go.
This definitely needs to be multiple computer screens.
Okay, there we go. And there we go. And now we're going to do Go Mortgage. And Dylan's going to show us. Where's calculator? Mortgage calculator.
So mortgage calculator.
Mm-hmm.
Yep. So it's actually super easy. So I would just do the total mortgage payment calculator.
Okay.
And so just so everyone knows, this is all available for you on your. Can they see us? Or
well,
we're sharing screen.
You're right here. They can see.
All right. So if you guys can see, so just I sure hope you guys can see this. I don't know. Anyways, Guild Mortgage. We have an app. Okay. You click on calculator and it'll let you do a new purchase, a refi, you know, it'll run through anything. So anyway, new purchase and right here, rural housing. I mean, you can go straight to there and see if it's going to work for you. And it works just like this one here on the website, except for I think the app gets a little bit more in depth for you. You can go by loan program, whereas to this one, it's just going to get you, you know, how much you're looking for, what your down payment is. But it works great. It's a free app that you can download. So if you need me to send you the link to it, or if you need some help with it, just holler at me and I'll help you download that. But it works just like this. You'll just calculate a USDA or an FHA or a conventional or whatever loan product you're looking for. It'll get you set up.
Yep, that was a really good point. I'm glad you pointed that out. So if you see right now, what I did is I just plugged in some numbers while Dylan was talking, put in a $200,000 sales price with 0 down, which was our USDA product, right? I'm just saying 5%. Don't quote me on 5%. I have no idea if that's the rate for the day. I doubt it. But we're hopeful. And then Texas in 30-year term. And then when you hit the calculate button, you just got to scroll down a little bit and it will tell you what the breakout is for principal and interest, for private mortgage insurance, hazard insurance, property taxes, and then the total payment. And usually what we mean by, if you ever hear us say PITI, this is what we mean. We mean principal, interest, taxes, and insurance. That's what PITI means. So if you ever see us do that accidentally, that's what this total is right here. That's the PITI. So any questions about that? Okay, and then in the chat, Brandy did get back to us, and I was so happy to see this, Brandy, because I almost said 1%. So I was right. I shouldn't have second guessed myself, but the guarantee fee is 1% of the loan amount. So meaning the amount that we're financing for the actual loan. So if they don't do zero, if they do 0 down, that's the full amount. So in-ground swimming pools are acceptable now. The borrower cannot own any other properties. Any comments? Any more questions? Those are some really good questions.
You know, I find it interesting that the third-party financing addenda, you know, obviously allows for, you know, a box to be checked for USDA. And then when you do the appraisal waiver addendum, it specifically says not for FHA, not for VA, and obviously USDA is not mentioned. But according to Brandy's comments, if they've got a little cash in reserve, they probably don't qualify for the loan anyway. So chances are good they're not going to be able to use that to get a property, even if have to pay a little more than asking.
You're right, Norman.
That's a really good point. Another thing too, Brandy put in the chat, she did give a breakdown of debt to income. So if y'all want to look at the chat, maybe just take a screenshot of this. It's really good information. You can see right here, she kind of broke out how we calculate that. So basically she's just saying, if to answer Mia's question earlier, if somebody is making $32,000 a year, you divide it by 12. So that gives us approximately $2,666 in monthly gross income. And then you just multiply that by 41%, and that would give you the maximum debt to income ratio of 1,093.33, which would mean no other debts can be included. Then they can afford that monthly payment, that 1,093, right? That means they're eligible in that 41% debt to income. And that would be a roughly a value of $100,000. Make sense? I love having you on the call, Brandy. Thank you so much.
You did great. John had asked about the maximum and minimum of land size. I'll have to get back to him on that, because I do believe that for USDA and Guild, our guidelines, I believe, is up to 25 acres, but I need to confirm that. So I'll get back to you, John, on that question.
Okay. Yeah, that was a great question too, John. Thank you so much. Everybody was so contributive today. I don't know if that was a word. Everybody contributed great today. I really appreciate it. Mia just said one more thing about, we were talking about assets. What's the maximum amount of assets or reserves you can have in the bank? I don't know the answer. Brandy, do you know that answer off the top? If you're talking, I think you're on mute.
Yeah, sorry. I don't know what the max is. It probably just depends upon the loan amount too, and the whole perspective of it all. So, you know, if somebody is looking at $100,000 loan, then of course, you know, the assets can't be, you know, way high. But then if they're looking at which, I mean, again, you're looking at the income of, what was it, 100 and something thousand. So you're probably not going to be able to fit somebody into like, you know, $300,000-$400,000 house anyway. So, but yeah, I don't know the exact, it just depends upon, you know, the actual loan amount itself.
Was it already discussed about any reserves they have to have, you know, in the bank at closing?
No, USDA is a little bit different on that. Different from like FHA, you know, or conventional loans. Sometimes we do run into where they do have to have reserves, but USDA is truly for people that, you know, don't have any money, they don't have any reserves, they don't have much assets, and so there's not any reserve requirements on USDA.
And to that point, you can get grant assistance with a USDA product. So that's something else to keep in mind for, you know, our clients that don't have a lot of money saved. Doesn't mean that they can't get it. They might need to save a little bit or maybe get some gift money, but it's to contribute the rest of the closing costs, but we can cover some of that. So just keep it in mind. We're always thinking about that. Every time we look at their assets, when we see that they have low funds saved, the first thing in our mind is to see if a grant program would be suitable for them. So just keep that in mind. We're always thinking about that. But I really appreciate everything, all the questions that you're asking. I just wanted to show y'all a few more items. So we actually have a couple of really cool flyers that we'll share with y'all as well that you can share with your clients. And we have one with Brandy's information on here too. So I'll send y'all both sets. So depending on if your client's working with Brandy or Michelle, we'll make sure you have the appropriate collateral for them. But basically, this is just showing you, and let me make this a little bit bigger. Okay, so this is just a little flyer that we like to give to clients that are just maybe inquisitive. And really, I feel like it's more geared for you guys. Just so you have this handy when somebody starts talking to you about USDA products, and you can just give them the overall like high level of what they can expect. So just keep that in mind. It gives a lot of good information that we already discussed during this call. And then there's another one. And this one just gives you a little bit more information as far as like the mission statement and so forth that we discussed as well. But again, these are both great tools to share with your clients, especially if you know upfront they've come to you and said, I'm going to live out in the country. You might want to send this to them with like your initial email to them if you're going to refer them to us. So just helpful tools.
So that other one you just showed, do you have that in a PDF file to email to us? Good.
Yes.
I have 3 people that this is like making sense.
Awesome. Monica was saying that she has 3 clients that this might work for. So she just wanted to make sure I was going to send the collateral documents to y'all in a PDF format as well. And I will, along with the PowerPoint presentation. All right. And this one more thing I wanted to show y'all. I can't really go into the tool that we use for underwriting, but I can show you what it looks like. And I had it pulled up, so bear with me as I struggle with these screens. Let me find it for you. I don't know why this is so hard. Come on, little cursor, you can do it. Here we go. Okay. Okay, so I'm going to go here to my little guide. And this is the link that we use to log into the tool. And basically, this is the USDA Lender Interactive Network Connection. And this is where we go to use the Guaranteed Underwriting System tool, which is called GUS, right? And we use this to determine qualification. So basically, the application that we have set up, we can actually import the application into this tool. And I can only log in. I can't show you a live application, obviously, but I'll just show you what we're looking at. So once we log in, this is where we go. And we actually have like an HTML format for the application itself that is interactive with the system. So it takes all the data points and plugs it in and uploads it to their system. And then from there, we have to go in and like manually adjust anything that might have been missed. It's pretty intense. I will say for these, keep in mind the turn time. It's not as quick as the other applications. It's not an automated review by any means. So it is automated once you get everything plugged into this tool, but we're plugging in the tool. We can get most of the data points imported, but like I said, you do have to go in and individually line for line, make sure everything's accurate. And there's probably, I would say, at least 10 tabs of information that the government is looking for to get qualified for the customer. And then from there, it's pretty easy. Once we have everything set up, even if we have to make minor adjustments because they've come back and said, hey, you know, we have this other income that we need to include or exclude or whatever, we can do that. So once we get it set up here, it's pretty fast. But the initial setup of this, I would give us a little bit more turn time than we normally do. So usually we're pretty quick. A lot of times we can do those same day turnarounds on these. I would say for a USDA product, we will need at least 24 hours. So that said, I think that is concluding our conversation, unless anybody has any more tidbits of information or knowledge that they want to add, or any more questions. All right. Well, and I'm Marisa. You can reach me here. So again, I will make sure to send a copy of this to everybody. Dylan, again, is our team intake specialist, and he's taking a picture of me right now. So Dylan, come say hi again, because I don't think everyone saw you earlier.
No, they didn't, and lucky for them, they didn't. But anyways, here I am. So Marisa did a great job filling in for Michelle, I personally think. So anyway, I want to add one more thing, though, before she lets you guys off here, because I know you guys are all business partners, you know, or just in here learning, trying to figure out what you can do with your buyers or whatever the reason you're in here for. I just wanted to make note of one thing. And yesterday this happened, so that's why I wanted to say this. We get asked all the time, do you do this type of loan? Do you do a USDA? Do you do a VA? We do all loans. We do any loan that you want us to do, we can do that. We may broker them out, but we can do them, okay? And we can help you figure out how to do them. So please just use us as a good resource, if nothing else. So anyways, good seeing y'all. Marisa, take over.
Yeah, that's a really good point. And like you said, in some cases, like for example, a land only, we can't lend on land only, but we got a lot of good partners that we can refer them to. But we would still like that connection with them, because if they need permanent financing later, we're the ones to come to. So that said, it looks like we have some more chats before we end, and it looks like everyone's just happy that we had a great meeting together. Well, thank y'all all for coming today and showing up. I really appreciate all the feedback and interaction. And if you need anything, you know how to find us, and we'll be looking for your referrals. Thank you so much. Y'all have a great day.
Thank you.